How's it going, everybody? It's Stas here. So the stock market, well, it was all over the place today. We had the S&P and the Dow go down 0.1% as the NASDAQ 100 went up 0.1% and the Russell went up 0.2%. So today we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, take a sip of your coffee, smash that like button, check out my Patreon, link down below, and let's get right into the video. So you guys can see we had a pretty horrible day yesterday. You know that. I know that. It was an awful day. SPY ended up hitting 428 right around pre-market, or rather, what the heck am I saying? Not pre-market. At what's it called? Power hour. That's what I'm trying to say here. We hit 428 at the beginning of power hour. Then we saw a massive relief rally. We rallied about 6 points for the rest of the day. We went from 428 to 434. We ended up rallying after market hours yesterday, pre-market today as well, up until the point where we got to 438, 439 at 4 a.m. on the East Coast, and that is where we started giving back some of the gains. You guys can see here, SPY struggled pretty much ever since pre-market today, all throughout the market open today, up until close, literally right now. SPY struggled at the 50 moving average on the 20-day chart, right? We failed breaking out of there. We tested it many times, and we ended up taking out the lows from today's session as we close the market, right? You guys can see the low point from earlier today at about 10 a.m. on the East Coast was right around 433. And if I pop up the intraday chart, you guys can see now we're trading under 433 in the aftermarket session. Hence why I said we took out the lows from earlier today, which is not good for the bulls whatsoever. And what this is telling me is the rally we saw yesterday at start of power hour into the aftermarket hours into pre-market today, that rally was a bull trap, right? We saw a lot of buyers come in. Now a lot of them that were buying SPY are underwater, considering we gave back a lot of that gain throughout the session today. Even though we didn't do bad in terms of the closing price, we only went down 0.1%, but you guys know what I mean, right? We failed at this moving average, and with the Fed meeting tomorrow, hey, we could be going lower depending on what is going to come out of Jerome Powell's mouth and what they decide to do with, tapering, when they're going to taper, interest rates, the economy, labor market. It's going to be a volatile day tomorrow. So for that exact reason, I have a pretty good amount of cash on the sidelines waiting to make some moves. I didn't do anything crazy today. Quite frankly, I didn't do anything crazy yesterday either. I really want to see what this Fed meeting is going to be about. And you guys can see QQQ is also looking like a bull trap. The rally we saw, shall I say, looks like a bull trap. We went from 360 to about 370 from aftermarket hours yesterday to about, what time was it? 4 a.m. here on the East Coast pre-market. We saw that nice $9, $10 pop, but we ended up getting rejected by that 50 SMA on this 20-day chart, and now we're dumping about to be under 365 here in the aftermarket session. So I wouldn't be surprised, guys, seriously, excuse me, if we ended up going down a little bit further here, which again is why I do have a pretty good cash position right now. And I've been telling you all, cash is a position. Have some cash, whether it's 5% of your portfolio, 10, 15, 20, 25. It really doesn't matter. It's all relative to you. Whatever you feel comfortable with, depending on your outlook on the markets, whatever. Have that specific amount of cash, and it should work out for you, depending on what you want to do there. So what are your thoughts? Let me know down below in the comments. If you guys are enjoying the video thus far, smash that like button, subscribe, hit that notification bell. It really helps me out, shows me that you guys actually find value in these videos. So we have some earnings reports to go over, but the thing is, I didn't look at them for myself yet. And this is a game I like to play. When companies report earnings, I like getting a live reaction out of myself to their earnings and to the price action of the stocks. So let's go. We have Fedex, Adobe, Who else reported today? Stitch Fix and Aurora, which we'll go over at the end of the video. So make sure you guys stick it through. And let's talk now about Fedex, ticker symbol FDX. And before we even look at what's going on, this is a stock that's been hammered. From my memory, it's down at least 15% from the recent all-time high. And it could be going lower right now, depending on what they just reported. So let's take a look. FDX, or maybe they didn't even report yet. Nope, they did. The stock is down. And like I just said, it could go lower. It's going lower. It is down $10 per share here after market hours. It closed at $252. Now it's trading at $242. So it's down, what's that? Another 5%. Wow. So now that it's down 5% after market hours, it is down 25% from that 320 high back in May. This is crazy, guys. Let's take a look at the live news to see what they ended up doing. So we see here, oh, there you go. They cut full year 21 guidance. That's got to be one of the reasons why they're not doing well right now after hours. And another reason, EPS missed by a wide margin, $4.37 versus the $5 estimate. That is a huge miss on EPS. And we saw sales come in at $22 billion versus $21.91 billion. So they beat sales, but the fact that they cut guidance and they missed EPS, and for a company like FedEx, EPS is important. You know, it's not like one of these high-flying growth stocks where EPS doesn't really matter right now. EPS for FedEx does matter right now. So they missed that. They cut the guidance. I wonder why, though, man. That's interesting. I want to see what their next quarter is going to look like, too, with, holiday shopping coming up, all the shipping that's going to occur throughout the holiday season. Hopefully they do see a better quarter next quarter. Maybe we do get a bounce back in the stock after that, but you're going to have to wait a couple months for that. So it really depends on your time horizon. But for me, being a swing trader, I day trade sometimes as well, but being a swing trader that doesn't mind holding some stocks for a couple months, this might be one that I'm looking at here, seriously, especially if we start going 220, 230 on the stock. And again, I already mentioned it's down 25% for a big company like FedEx. That is no joke. I mean, I think this could prove to be a dip buy in the short term here, whether it's at 230, 220, 240. I have no idea. We have to wait and see what the markets give us. And here on the 3-year chart, 210 is the 180 SMA support. Maybe, worst case scenario, 210 is where it ends up going. So FedEx, guys, watch it. It's getting hammered right now. And it's downtrending in the short term the past 3-4 months. So keep that in mind. But if you're willing to hold through some pain, you have some time on your side, even though this is not financial advice, I think FedEx could be one worth looking at. And let's see what UPS is doing, because like I always say, companies that are competitors, whether it's the airlines, the cruise lines, the banks, whenever one reports, not always, but sometimes it shifts the competitor's stock price. So let's see if UPS is dropping. If I were to bet my money, I think it's dropping as well. Let's take a look here. UPS, yep, I'm right. It's dropping. It closed at 189.73. And right now, after hours, it is at 186. So it's down about $3, $3-4 after hours, or around 2% if you guys look at it from a percentage basis. So yeah, keep an eye on UPS, FedEx for sure these next couple of days and for the next couple of weeks as we're slowly getting into the Thanksgiving, Christmas, holiday season in general, where obviously a lot of people are shopping, packages are being sent, and so forth. Adobe, ADBE. Let's take a look, guys. Adobe's crashing as well. What the heck's going on here, guys? Adobe closed at $645. Now it's trading at $622 after market hours. That is a $23 drop. And let's see, it actually got down to $616. So from market close to $616, that is a drop of 5%. That's a pretty big drop for the company size, or for the size of Adobe. I mean, it being a couple $100 billion at this point. Let me look at the market cap very quickly here on Yahoo Finance, guys. Bear with me. It's got to be like 300 billion, maybe not that big. I might be blowing that out of proportion. Oh, it is, exactly 300 billion. Jeez, I did not think I would guess that right. But it is $300 billion market cap, so a 5% drop. That is a pretty decent sized drop. We're talking billions of dollars being shed off the market cap here. So let's see what they did with earnings. Let's see here. EPS, okay. EPS came in at $3.11 versus $3.01 estimated, so they beat EPS. But revenue, I was about to say revenue missed. Nope, it did not miss. It beat as well. $3.94 billion revenue versus $3.89 billion estimated. Did they report guidance? I'm not seeing any guidance right now. Or actually, no, they said they see Q4 revenue of 4.07 versus 4.04 billion estimated. So that's over the guidance for Q4 revenue. And Q4 revenue looks like it's going to be better than Q3 revenue, which I can't complain about that. And for some reason, the stock is down a good chunk. So this could be an overreaction. Excuse me, guys. This could be an overreaction. It really could be. And at this point in time on the 4-hour chart, you have to understand it's trading under both moving averages, the 50 and the 180 SMA. So that is a bit worrisome. It also looks a little bit like a falling knife at this point. But if we do start recovering at 615, 620, maybe we start making that push back towards the moving averages, that could be an opportunity for a play on an overreaction, because the earnings from what we just briefly saw just now, they weren't that bad, and the guidance for the next quarter is up in terms of revenue estimate or their estimate for the revenue versus the analyst's estimate, right? So keep an eye on Adobe here. Tesla is another one that looks decent. We're holding the uptrend on the 4-hour. We're trading above not only the 180 SMA, but also the overall trend line that I have drawn out here. And it looks like we're also in an ascending triangle. Do you guys see that? We have resistance at about 760, but we've been uptrending into that resistance, squeezing deeper into the triangle. So I want to see if we end up taking out 760. From there, we probably will see a leg up towards 785, 790. And with all of these large cap stocks, guys, Tesla, Adobe, Fedex, you have to realize if the markets in general end up collapsing, we're probably going to see these large caps collapse as well. So keep that in mind. It's not like it's a small cap or a more speculative stock which could go up on a red day. For the most part, if we have an overall red day, these large caps will be crushed. But if we get a bounce back overall, we could see that ascending triangle play out on Tesla, and we might squeeze up towards the high 700s, which we haven't touched since back in April, back in May as well a little bit. So actually, no, it wasn't in May. It was really just in April. Other than that run up in April, we haven't been in the high 700s since February. So it's been a while for Tesla. And now that I'm looking at this, the futures are down right now. We have the NASDAQ futures down 0.3%, Dow's down 0.3%, S&P futures are down 0.4%. Let's see what SPY's doing after hours right now. SPY's taking a beating, guys. We already talked about it. It took the lows out from earlier today. So bears, they're gaining some momentum right now. They really are. And let's talk about some other stocks before I get too carried away on the overall markets. Palantir, PLTR, this one up 0.3% today. Nothing too crazy. If you guys saw it yesterday, it went down like 8%. Maybe close to 10% yesterday from top to bottom. And it looks like it's holding the uptrend. We're holding above the 50 and the 180 SMAs right now on the 4-hour chart. And we have a clear resistance coming up at about 27 to about 27.50. That was the high point from the end of June. If we end up recovering past 27, I'd say, which I'm going to put my alert right now, right around $27. If we start breaking out of there, I think this could test the highs again from $29, which we were just at, I believe, last week or maybe literally 2 days ago. What day is it today? Tuesday? Yeah, that might have been on Friday we were at that point, $29. So if we break 27, 27.50, I'm thinking 29's coming. We might even take 29 out and start going 30, 31, which was the high point from the end of February. So keep your eyes on Palantir on this dip here. Facebook, FB is another one that I'm personally looking at on this dip. Even though it's trading under both moving averages, we're starting to see the beginning of a potential death cross. And like I said, with FedEx, Adobe, Tesla, Facebook being a large cap, it's going to get hit. If the markets get hit, Facebook is going to get hit. But let's say the Fed says the right things, the markets like what the Fed says tomorrow, we might get a reversal, a hard reversal back up in these stocks, the large caps, and Facebook might be a beneficiary of that, if that's even the right word. You know what I mean? It might benefit from that. Let's just put it like that. And maybe we start moving back over the moving averages, because as of now, Facebook is down $30 from its peak, pretty much, down about 8%. So it's almost in correction territory, and I think it's opening up as a pretty decent swing opportunity. And let's talk about ACB and Stitch Fix very quickly, which just reported earnings today as well. And if you guys stuck till the end, let me know in the comments. I would really appreciate it if you did that, and make sure you hit the like button if you haven't done so already. Again, that helps me out. So ACB, Aurora, Canna, you know what? I don't know if I can say it. Whatever. You know what it does. Puff, puff, pass. Snoop Dogg. You know what it is, right? Aurora Cannabis. I just said it right there. If I get flagged, who gives a crap, right? ACB is the ticker, right? And it doesn't even look like they reported earnings. What the heck? Did they push it back? They might have. It says 4 p.m. Let's see here. Live news. Yeah, they didn't report earnings yet. So you're not going to get my reaction on ACB, guys, but you can clearly see the chart is not pretty. It went from $22 back in February, where you guys saw it actually went from $10 to $22 in the span of a month back in February, and now it's cratering. It cratered all the way down to $6. The stock is down 75%, which is horrible, and it's clearly been downtrending. Moving averages have been resistance. We see a death cross forming. It's been formed, all of that crap, and at this point in time, I want to see what the earnings look like, and we probably won't catch it in this video, but I want to see if we start getting a move back up, not only in this MJ stock, ACB, but the overall industry in general. I mean, a lot of these stocks have been hammered, from ACB to Tilray to what are the other ones? I haven't even looked at these in a long time. CGC. What else do we got here? What's the ETF? I think it's called MJ. Yeah, look at this ETF. It's down from $35 in February. Now it's at 14. It's down 60%. So these, I mean, the whole industry is in shambles right now. So we could overall see a bounce back if they start reporting good earnings. So we have to watch out for that. Stitch Fix definitely reported, so let's see what they did. Okay, the stock's up a good chunk from $35 at close. Now it's at 41. The stock is up roughly 15%. That's solid. So let's see what they reported. They did EPS of 19 cents versus the 13 cents in the red estimate. So they pulled a surprise profit. Sales came in at $571.2 million versus $547.89 million estimated. So they beat EPS, surprise profit, and they beat sales, and they see Q1 net sales of $560 to $575 million. I wonder what the estimate on that is. They probably guided up, which is good. Let's see here. They see full year 2022 net sales growth above 15% year over year. I guess that's good, but I'd like to see a growth company growing more than just 15% year over year. That's just me. I don't know. Maybe I'm wrong there. Maybe you guys could leave me some insight down below in the comments. But overall, this one, like Aurora, is downtrending, even though it has nothing to do with Aurora. It's still downtrending, right? We broke above the 50 SMA with today's after-hour session move, but we're still under the 180 SMA. So we got to break out of, I'd say, 45 for the real reversal to come on this stock. So I'm going to put a mark is at or above order at $45 per share. That's right around that 180 SMA. We might break out of there. You guys see volumes kicking up. We have a bullish divergence as well, which is solid. Stitch Fix is worth watching here, no doubt about it. So I'm going to wrap it up here. If you guys enjoyed the video, make sure to hit the like button, drop me a comment, subscribe to the channel, hit that notification bell, and check out my Patreon. If you guys want all my real-time buys, sells, call-outs, morning update videos, option moves I'm making, private Discord access, plus more, all of that's on Patreon. Link down below, or you can go to stocksurfest.com/Patreon. Make sure to also get your $30 from M1 Finance or 2 stocks from Webull up to $1,600. Those are linked down below. I'll catch you guys in the next video, which I made one earlier, going over 2 oversold stocks to look at right now. Go watch it. We didn't talk about those 2 stocks in this video, so go check it out. I'll pop it up here. See you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.